Hi everybody, Eric Hendrickson giving you the Mortgage Minute here on Wednesday, June 22nd. Well, this past week we saw a lot of excitement. Friday of the previous week, the Consumer Price Index came out really heavy, showed high inflation. I think a lot of the market traders were off that day because the following Monday came up and the markets just blew up. We saw a massive sell-off and interest rates went up over a half point, probably the biggest jump that we've seen in the last few decades for a single day. So that was really ugly, and basically what the market was doing was pricing in future expectations of heavier Fed action, and they didn't have to wait long because on Wednesday of last week the Federal Reserve actually met and they bumped interest rates up 3/4 of a point for the federal funds rate. Previously they had pretty much dictated that it was going to be 50, but because inflation being so heavy, they had to go a little more aggressive, and that's just what caused all of that volatility both in the stock market and the bond market, which drives mortgage rates. So we're kind of in this recalibration period where these rates, kind of the 30-year fixed, are now kind of above 6 in that range. That's maybe the bad news. The good news is we've kind of tested higher levels and we've come back down to kind of that 6% range. So I think we're kind of in the new normal right now. And I think the good news potentially, if we do see some signs that inflation is starting to ebb, I think you could see them potentially get back down in the 5s, which would certainly be welcome news for the housing market. We've seen existing home sales kind of plummet downward, new home sales, because of the higher interest rates and just inflation in general. So we're kind of in a little bit of a tenuous period of time here. Certainly in the next couple of months will be very indicative of what the future will hold. So we'll watch it very closely and we'll keep you posted. Have a great day.